Welcome back to episode 4 of Ask the Q. I got 5 questions I'm going to ask, and we'll be back in a second to answer those 5 questions. All right, team, welcome back. I was asked, what is Ask the Q? Ask the Q is me talking about questions that I answered throughout the week about real estate investing, real estate sales, real estate buying, and how the market is doing. And that's all it is. My take, my opinion, and if you take it, if you like it, great. If not, that's fine. But that is all what Ask the Q is. Now, let's go to our first question. Insurance claims. How long do insurance claims stay on your, what they call, loss report? On your loss report, it'll stay on board on your report for approximately 5 years. So that's 5 years of raised insurance premiums. So every time you file a claim and you have a loss, well, every one of those becomes an increase in premiums. So we had one in 2019, and our premiums across the board went up. Bottom line up front, if you get a payout, expect to pay later. That's what happens when you file a claim, and how long it'll last. Question number 2 that I answered this week was, hey, my hard money lender said no. And then I asked the question back, how many lenders did you talk to? Now, for example, I talked to 35 lenders before I found one that met my criteria, and my criteria met their financial needs. We both were in a symbiosis to where we, as a team, went forward and worked together for a couple of years. 35 phone calls. So expect to make some phone calls, i.e. do a little bit of work if your hard money lender says no. And they can be saying no right now for a bunch of financial reasons on their end, not even looking at your package, i.e. you can't even get in the door because it's not high enough, or you can't even get in the door because they're not taking loans of that type anymore. So just remember, it may not be you, it might be them. I had an internet hit of a young lady who transferred her property that she had rented. She was doing her own bookkeeping, all the above, and went over to a PM, which is great. All fine and dandy. Love it that you were self-managing. She had the question, what happens transferring from self-management to property management? Well, start off with the lease. The lease itself will transfer over line for line, page for page. At expiration, termination, or renewal, the lease should go from whatever you drawn up with your lawyer or whatever you used to grab that tenant to whatever the PM uses. So it's going to be a handoff, one-for-one handoff over to the PM's documents at expiration, termination, or eviction. Other than that, things should be just normal. They'll have their own companies that they refer to and get, plumbing done, etc. Do expect an initial hit if they walk through and do a walkthrough inspection. So if they walk through and do a walkthrough inspection after taking over, just expect, to spend a couple $1,000s turning over to a PM, because a PM will ensure that those things that you lived with or the tenant has lived with that should be fixed but didn't get fixed, they get fixed, and you move on and have a happy symbiosis between you and the PM, and a great symbiosis between the PM and the tenant. Question number 4, I was asked how the market was doing. Now, the market is doing what the market does. Goes up, goes down. Right now, we're in a downward slope for the New Orleans area, and that's fine. That's normal. What market analysis, or what do I have for the analysis of job reports and CPI? So job reports was up, right? Last week, job reports came out. Jobs, we added 300,000 more jobs to the market. Well, what would that do for interest rates? That would signal an upward pressure for interest rates. But then today, or yesterday, we got the CPI report. And this Consumer Price Index report said, hey, inflation's still up by 3.3, approximately. Well, that is downward pressure. So overall, in the next 2 months, we may not see interest rates change due to the negating of pressure from CPI and the jobs reports. In November, we'll find out, but I don't think we're going to have a rates raise in November, but we could have one in December if things change. And remember, during holiday season, more spending, and during the holiday season, also more cuts. So we'll see what happens with respect to all of that. Finally, this is JQ. If you like my content, please subscribe. Please like and subscribe. Let's have some fun with this. Let's take this to the next level. This is JQ. Try to put some good content out for you. I'm out.